Have Austin step back from that workstation, keep both hands where I can see them.
What?
This is Hava Yfrah Austin, and she kept her own records of exactly where $9.8 million went. Those records are now Exhibit A, and they lead straight to the casino floor.
I handle the books here. What is this about?
We're investigating unauthorized wire transfers out of company
There
accounts.
has to be a ledger issue. I reconcile those accounts every
Then
month.
step away and let us secure the workstation.
I didn't authorize anything improper.
She would not be boarding that flight. Federal agents had been watching her passport for weeks, and the one-way ticket she had booked to leave the country was already flagged the moment it hit the reservation system. $9.8 million, 6 years. A bookkeeping firm in Plantation, Florida that existed, in the end, for the sole purpose of laundering an embezzlement scheme through fake vendors and casino slot machines. And the woman on this body cam footage, Hava Yfrah Austin, 58 years old, was 72 hours away from being the defendant in one of the largest single-victim wire fraud cases in South Florida history. Before we go any further, have you ever handed someone the keys to your business accounts and just trusted them to be honest about what happened next? Drop a comment and tell me if you would ever let anyone but yourself have signature authority on the money that keeps your family alive. And if you are new here, subscribe. This channel covers the cases that fall through the cracks of local news, and there is a fresh one waiting for you every week. Hava Yfrah was born in 1967 in Ramat Gan, Israel, the middle child of a family that ran a small textile stall in the outdoor markets outside Tel Aviv. Her father kept the books for the stall in a leather-bound ledger he carried home every night in a canvas bag, and her earliest memory of adult work was watching him at the kitchen table, adding columns of shekels by hand under a bare bulb while her mother finished the dishes. Numbers were the family language. Whether the day had been good or bad was a question you answered with a total, not with adjectives. The family emigrated to South Florida in 1979 when Hava was 12 years old. They settled in Hollywood, Florida, in a stucco duplex 2 blocks off Hollywood Boulevard, and her parents took jobs at a linen supply company that serviced the beachfront hotels. Hava enrolled at Hollywood Hills High School and, according to a former guidance counselor, quoted years later in a Sun Sentinel profile of the family's business, she was quiet, precise, and mathematically gifted. She graduated in 1985 near the top of her class and took her first real job that summer as a filing clerk at a small CPA firm on Sheridan Street, earning $4.25 an hour. She married Michael Austin in 1988, a construction estimator from Davie, and took his last name. They bought a small ranch house in Plantation for $64,000 and had 2 children by the mid-1990s. Michael worked long hours on commercial builds across Broward and Miami-Dade. Hava, by then a full-charge bookkeeper at a mid-sized accounting firm in Fort Lauderdale, worked days and did side clients from a converted second bedroom at night. Her clients loved her. She returned calls the same day. She caught errors other bookkeepers had missed for years. She was, in the language of her performance reviews from that period, meticulous, dependable, and unusually discreet with sensitive financial information. In 2003, she took the leap and opened her own firm, Accounting Solutions. Today, PA was incorporated in Broward County on March 11, 2003, with a suite on West Broward Boulevard, 1 part-time assistant, and a client list she had built from referrals over 15 years. Within 4 years, she had 32 active clients. Most were small contractors. A handful were medical practices. 2 were family-owned restaurants. 1 was a family-owned wholesale supplier that would eventually become the victim in this case. The firm cleared just under $300,000 a year in gross receipts. By any external measure, Hava Yfrah Austin had built exactly the kind of quiet, respectable professional practice that immigrant parents point to when they explain to relatives back home why they moved. The wholesale supplier, the eventual victim, had hired her in 2007 to do their monthly reconciliations and quarterly tax filings. The owner, a Broward County businessman who had inherited the company from his father, was in his 60s by then and openly disliked the mechanics of accounting. He wanted someone he could trust so completely that he never had to look at a ledger himself. In 2011, satisfied with 4 years of clean books, he added her as a signatory on the operating account. It was a decision made over coffee at a Denny's on University Drive, with no legal review, no dual control policy, and no second set of eyes. Hava Yfrah Austin now had the ability to move money out of the company with a single click. For 7 years, she did not. From 2011 through late 2017, every entry in the company's books balanced. Every quarterly filing matched the bank statements. Every tax return closed cleanly. She built a reputation for being the reason the business ran smoothly, the invisible spine of an operation the owner increasingly checked out from. When the owner's wife died in 2016, Hava sent flowers and drove to the Shiva. When his grandson was born, she embroidered a blanket herself. She was, in every visible sense, family. But something else was happening in those same years, and it did not show up on any ledger. Sometime in 2015 or 2016, Hava Yfrah Austin began stopping at the Seminole Hard Rock Casino in Hollywood on her way home from client meetings. Just $20 at a time at first, then $50, then $100. Her husband did not know. Her children did not know. Her clients did not know. And by 2017, according to what investigators would later reconstruct from her player loyalty records, she was losing money at a rate that her legitimate income could no longer support. To understand what happened next, you have to understand how a small business bookkeeping arrangement actually works in Broward County, Florida, because the vulnerability that Hava Yfrah Austin exploited was not exotic. It was, and still is, standard practice at thousands of small companies across the state. A wholesale supplier the size of the victim company, meaning annual gross receipts in the 8-figure range, roughly 40 employees, one owner, no CFO, no controller, typically outsources every function it can. Payroll goes to a service like ADP, taxes go to an outside CPA, and the day-to-day bookkeeping goes to a firm like Accounting Solutions Today, run by a woman like Hava Yfrah Austin, who becomes the single individual with a comprehensive view of the company's money. That firm receives read and write access to the company's accounting software, most commonly QuickBooks or Sage. It receives copies of every bank statement. It reconciles accounts monthly. It records payables, cuts checks, initiates wires, and produces the reports that the owner glances at for 2 minutes on the first of the month before signing off. In a properly controlled environment, an outside auditor reviews the reconciliations at least annually, and no single person has both the ability to move money and the ability to record where the money went. That is the entire premise of financial controls: segregation of duties. The victim company had no such segregation. Hava Yfrah Austin had signature authority on the operating account. Hava Yfrah Austin recorded the transactions that came out of that account. Hava Yfrah Austin produced the monthly financial statements the owner reviewed. Hava Yfrah Austin also selected and paid the outside CPA who filed the annual tax returns, and that CPA accepted her work papers as authoritative because they were coming from a licensed, insured, 32-client bookkeeping firm with 15 years of clean history behind it. There was no audit. There had never been an audit. The owner did not want one. Audits cost money, and in his own phrase, quoted later to federal investigators, they made everyone act weird. He preferred the arrangement he had. One bookkeeper he trusted, one CPA who blessed her numbers, and a monthly profit and loss statement he read at the kitchen table over Sunday coffee. From 2011 through 2018, that system produced numbers he had no reason to question. From 2018 forward, the numbers he was reading were fiction. The first unauthorized wire went out on a Tuesday morning in February 2018 from the victim company's operating account at a Broward County bank branch to the business account of Accounting Solutions Today at a different bank across town. The amount was $14,200. The memo line read, Q4 2017 Professional Services, Invoice Pending. No such invoice existed. No such services had been rendered beyond the routine monthly bookkeeping fee, which was billed and paid separately every month. That first wire cleared without a single question. No one at the victim company saw it. No one at either bank flagged it. The owner did not review the outgoing wire log because he had never reviewed the outgoing wire log. The outside CPA did not see it because CPAs review annual returns, not individual outgoing wires from a bank operating account. She waited 2 weeks. Then she did it again. $19,500, this time with a memo line referencing a specific real vendor the company used, a warehouse pallet supplier out of Miami, with the vendor's name subtly misspelled by one letter. Then, inside QuickBooks, she recorded the payment as an ordinary trade payable to that pallet supplier, dated 3 days earlier. The bank memo and the ledger entry matched closely enough that any casual reviewer would see a legitimate expense to a known vendor. This was the pattern. This was the entire architecture of the fraud. Over the next 6 years, from February 2018 through April 2024, Hava Yfrah Austin executed an escalating series of unauthorized wire transfers out of the victim company's operating account and into her own firm's account. She kept a running mental catalog of the company's real vendors, the pallet supplier, the shrink-wrap distributor, the fuel service, the pest control contractor, the freight broker, the printer, the linen service, the 2 law firms the company used, and she invented phantom variants for each one of them, a single letter off, a different LLC suffix, an address 1 block down. The phantom vendors were the whole trick. She was not stealing from empty air. She was stealing from a fictional supplier list that she populated inside the company's own books with names that looked exactly like the names already there. When the owner glanced at his monthly payables report and saw a payment to Coastal Pallet Solutions, LLC for $22,000, he did not know that the company he actually used was called Coastal Pallet Systems, Inc. He was not going to memorize 40 vendor names. He trusted the report. By 2019, she was moving amounts north of $30,000 per wire, 4 to 6 times a month. By 2020, she was averaging just under $100,000 a month. By 2022, the pace had accelerated to over $200,000 a month, and the memo lines had grown bolder. Quarterly settlement, warehouse compliance retrofit, cross-dock consulting. They were expenses that sounded professional and specific, but corresponded to no actual work performed by anyone, anywhere. Every dollar went to the same place, not to a house, not to a boat, not to jewelry, not to any of the visible lifestyle signals that white-collar embezzlers usually give off in the years before they get caught. She and Michael still lived in the same Plantation ranch house they had bought in 1990. She still drove a 2016 Toyota Camry. Her children were long grown, one an accountant herself in Atlanta, one a nurse in Orlando. Neighbors describing her to reporters later would use the exact words modest and unassuming, and the last person you would ever suspect. The money went, almost in its entirety, to the Seminole Hard Rock Casino in Hollywood, to the Isle Casino in Pompano Beach, to the Coconut Creek Casino, and, increasingly and catastrophically from 2020 onward, to a rotating list of offshore online gambling platforms she accessed through a laptop in her back office after hours. Her player tracking data at just one of the 3 physical casinos would eventually show over 1,100 visits between 2018 and 2024, with an average session length of just over 4 hours and an average net loss per visit of approximately $4,300. She had good nights. Anyone who spends 6 years at a slot machine has good nights. Investigators would find one W-2G tax form issued to her in 2021 documenting a single jackpot of $86,000 at a high-limit slot at the Hard Rock. She did not report it on her tax return. She did not report any of the winnings, and she did not report any of the embezzled principal she was feeding through the machines. Her personal tax return for 2021, filed in April 2022, showed adjusted gross income of $141,000, all of it Schedule C income from Accounting Solutions Today. It made no mention of the $86,000 jackpot, no mention of the $2.1 million in wire transfers she had moved into her firm's account that year, and no mention of the roughly 1,900 hours she had spent seated at slot machines and online tables. In the eyes of the Internal Revenue Service, in 2021, Hava Yfrah Austin was a modest small business owner, clearing a comfortable but unremarkable middle-class living. We are about to get into how this actually unraveled, the specific mistake that turned a 6-year scheme into a federal indictment. If you have made it this far, you already know this channel goes deeper than the local news clip you probably saw the first time you heard the number 9.8 million. Subscribe. The next case drops in a few days, and it involves a nurse who did something even harder to explain. Every long-running fraud has a specific date on which it began to end. For Hava Yfrah Austin, that date was in the last week of March 2024. The owner of the victim company, then in his mid-70s, had been quietly discussing selling the business with his children. Neither child wanted to run it. A commercial broker in Miami had drawn up a preliminary valuation, and part of the standard due diligence process for a sale of a company that size was a quality of earnings review. That is a form of financial deep dive conducted by an outside accounting firm hired by the prospective buyer. The prospective buyer, a regional consolidator with 3 similar businesses already in its portfolio, sent its Q of E team in on the last Monday of March 2024. 4 accountants from a Fort Lauderdale firm arrived at the warehouse with laptops, 3 ring binders each, and a scope of work letter that included, on page 4, a line item labeled Vendor Master File Verification. For 6 years, no one had verified the vendor master file. There had been no reason to. The owner trusted his bookkeeper, the CPA trusted the bookkeeper's work papers, and no external event had ever forced anyone to open QuickBooks and cross-reference the vendor list against the actual vendors doing business with the company. The Q of E team did it on their second day. One of the junior accountants, a 26-year-old 2 years out of the University of Florida, pulled the vendor master and sorted it alphabetically. She noticed, almost immediately, that Coastal Pallet Solutions, LLC, and Coastal Pallet Systems, Inc. both appeared in the list, with year-to-date payments of $31,000 and $289,000, respectively. She flagged it. Her manager asked her to pull the invoices for both. There were invoices for Coastal Pallet Systems, Inc., handwritten, matched to receiving reports, tied to actual pallets sitting in the actual warehouse. There were no invoices for Coastal Pallet Solutions, LLC. There were no receiving reports. There was, in the ledger, only a series of wire transfer records referencing invoice numbers that did not exist on paper anywhere. Every one of those wires had gone to a bank account whose routing information matched the operating account of Accounting Solutions Today, PA. The Q of E manager called the buyer's principal, who called the seller, meaning the owner, that same afternoon. The conversation was brief. The owner, in a statement he would later provide to federal agents, said the phrase she would not do that 3 separate times in the span of 90 seconds. Then he got quiet. Then he asked the buyer's team to keep looking. They kept looking. Within 4 days, they had identified 14 phantom vendors. Within 2 weeks, they had traced the pattern back through 6 years of ledgers and mapped just under $9.8 million in fraudulent outbound wires, every single one landing in the same destination account. The owner, still refusing to fully believe what he was seeing, contacted an attorney. The attorney contacted the FBI's Miami field office on the morning of April 8, 2024. The case landed on the desk of a special agent assigned to the Financial Crime Squad at the FBI's Miami field office in North Miami Beach. Within 72 hours, a joint investigation had been opened with IRS Criminal Investigation, whose interest was immediate. 6 years of undeclared income. Wire fraud predicates. A paper trail that ran directly through federally insured institutions. The mechanics of the investigation were straightforward because Hava Yfrah Austin had, in the words of one investigator quoted later in the government's sentencing memorandum, kept a perfect set of books, unfortunately for herself. Every wire had a date, an amount, an originating account, a receiving account, a memo line, and a corresponding ledger entry inside QuickBooks. Every phantom vendor she had created had a unique QuickBooks vendor ID, Every deposit into her firm's account was matched, within days, by a withdrawal in the form of a cashier's check made out to one of 3 casinos, or a wire transfer to one of 11 identifiable offshore gambling platforms. Federal agents subpoenaed her player loyalty records from the Seminole Hard Rock, the Isle in Pompano, and Coconut Creek. What came back was an anthology of a life spent in fluorescent light. Between January 2018 and April 2024, she had recorded over 3,200 sessions across the 3 physical casinos combined. Her longest single session, in the early morning of a Sunday in August 2022, ran for 11 hours and 40 minutes at a $5 slot machine on the Hard Rock's main floor. Her single largest one-night loss was $248,000. Her single largest one-night win, a run that must have felt, briefly, like salvation, was $312,000, which she gave back to the same casino over the following 48 hours. The IRS side of the investigation was, if anything, cleaner. Her personal 1040S from tax years 2018 through 2023, obtained by summons, showed a straight line of modest Schedule C income and no reported gambling winnings whatsoever. The government's tax loss calculation, filed as part of the plea agreement, worked out to just over $1.4 million in additional tax owed on the unreported embezzled income and jackpot winnings combined. Digital evidence came off her laptop, seized under warrant from the Plantation office on April 24, 2024. Investigators found a folder labeled Client Files, backup that contained, among other things, spreadsheets she had kept for herself, not for the victim company, that tracked her wire transfers in real time. Column A held the date. Column B held the amount. Column C held the memo used. Column D held the phantom vendor. Column E, updated in her own hand at the end of every workday, held the running total. The final entry, dated April 3, 2024, read $9,782,644. There were also, on a personal iPhone recovered from her purse during the arrest, a series of text messages to a friend in Boca Raton, a woman she had known for 20 years, from the last week of March and the first week of April, 2024. The friend, later interviewed by agents, cooperated fully and provided screenshots. The exchange, dated April 2, 2024, read as follows. Austin, April 2, 2024, 11:47 p.m. I think something is wrong at the client. They are asking questions I do not like. Friend. What kind of questions? Austin. Vendor stuff. Old stuff. 6 years old. It is fine. I am fine. Friend. Are you okay? Austin. I might need to go see my sister. Her sister lived in Netanya, Israel. On April 5, 2024, Hava Yfrah Austin used her personal credit card to book a one-way ticket from Miami International Airport to Ben Gurion Airport, departing April 27th. She did not tell her husband. She did not tell her children. She did not resign from her firm. She did not close its accounts. She simply booked the ticket in her own name, on her own passport, using her own laptop, from her own home Wi-Fi network. That was the same network federal investigators had, by that point, already served a preservation notice on. She was arrested on the morning of April 24, 2024, 3 days before the flight was scheduled to depart. The agents arrived at her Plantation office on West Broward Boulevard at 7:42 in the morning. She had, according to security camera footage from the strip mall's parking lot, arrived at 7:30. She was carrying a black leather tote bag containing her laptop, a client folder, a stainless steel travel mug of coffee with 2 Splendas already stirred in, and her personal iPhone. She had unlocked the front door, disarmed the alarm, and started the coffee machine in the small kitchenette at the back before she heard the knock. The lead agent, in the body cam recording, identified himself, showed his credentials, and asked her to step outside. She did. She was wearing a cream-colored cardigan over a light blue blouse, khaki slacks, and low-heeled loafers. Her hair, gray at the roots and dyed a soft brown, was pulled back. She was not surprised. Agent. Mrs. Austin, do you know why we are here? Austin, I have an idea. Agent, can you tell me what you think we are here to talk about? Austin, I would like to speak to my attorney. Agent, that is your right. Before you do, I am going to advise you that we have a warrant for your arrest and a search warrant for these premises. Austin, okay. Agent, ma'am, we also want to ask you about a one-way ticket to Tel Aviv that was booked from this location on April 5th, departing this Saturday. She looked at him for what the body cam clock shows as 6 full seconds. She did not blink. She did not sit down. She did not cry. She said one sentence. Austin, I was going to see my sister. She did not speak again. She was handcuffed at 7:51, walked to the unmarked sedan at 7:53, and driven to the FBI's Miami field office for processing. Her attorney was retained by her husband by 10 that morning. Her passport, already flagged in the Treasury Department's TECS database, was formally surrendered before noon. The indictment came down in the Southern District of Florida on May 30th, 2024. 12 counts of wire fraud. 1 count of filing a false income tax return. The lead prosecutor was an assistant United States attorney out of the Fort Lauderdale branch office. The case number was assigned to the docket of Chief U.S. District Judge Cecilia M. Altonaga, one of the most respected trial judges on the federal bench in South Florida. Austin's defense attorney, a veteran white-collar practitioner with an office on Las Olas Boulevard, did not fight the evidence. There was nothing to fight. The forensic accounting was clean. The bank records were clean. The QuickBooks metadata was clean. The Q of E-Team's report was airtight. The phantom vendor list, printed out and entered as a government exhibit, ran to 14 pages. On July 18, 2025, Hava Yfrah Austin appeared in a Miami federal courtroom and pleaded guilty to 1 count of wire fraud and 1 count of filing a false income tax return, in exchange for the government dismissing the remaining counts at sentencing. The sentencing hearing took place on September 15, 2025. The government asked for 60 months. The defense asked for 24, arguing gambling addiction, acceptance of responsibility, and the defendant's clean prior record. The victim owner spoke first. He was 77 years old by then. He read a 2-page statement from a piece of yellow legal paper, his hands shaking. He said his father had built the company in 1962 with a single truck and a warehouse the size of a 2-car garage. He said his father had been dead for 12 years and would not have understood how this happened. He said he had trusted Hava Yfrah Austin with the family name. He said, and this is a direct quote from the sentencing transcript, "She sat at my kitchen table. She held my grandson. She embroidered his blanket. She stole from him." Judge Altonaga listened without interruption. When she spoke, she addressed Austin directly. "Ms. Austin, this was not a moment of weakness. This was 6 years of deliberate, technically skilled, financially sophisticated theft, disguised inside the very books you were paid to keep honest. You built a fictional company inside a real one, and you used that fiction to move nearly $10 million into slot machines. The one-way ticket you booked is not a mitigating factor. It is an aggravating one. It tells this court exactly what you thought was going to happen when the numbers caught up with you, and exactly what you were willing to do to your husband, your children, and your victim to avoid facing it. The sentence was 51 months in federal prison, 3 years of supervised release, full restitution in the amount of $9,782,644, joint and several with any recoverable assets from the forfeiture proceeding, a separate forfeiture money judgment for the same amount, and a specific finding, on the record, that the defendant had attempted to flee. She was designated to the Federal Correctional Institution at Tallahassee, a low-security facility for female inmates in the Florida Panhandle. Her projected release date, factoring good conduct credit, is in the spring of 2029. She will be 62 years old. The restitution will follow her for the rest of her life. Her husband filed for divorce in October 2025. The Plantation ranch house was placed on the market in November. Accounting Solutions. Today, P. A was administratively dissolved by the Florida Department of State on December 1st, 2025, for failure to file its annual report. The victim company was sold in early 2026 to a different buyer, at a price roughly $2 million below the pre-fraud valuation. The owner retired to a condominium in Aventura and does not, according to a former employee, keep a checkbook in the house anymore. His daughter handles his bills. There is a specific detail from the government's sentencing memo that stays with anyone who reads the file. In the 6 years Hava Yfrah Austin was moving other people's money into casino machines, her player loyalty accounts across the 3 physical casinos earned her a total of 19 free buffet meals, 4 complimentary hotel nights, and a branded windbreaker. That was, in the end, the entire yield of $9.8 million, a jacket, a few dinners, and a plane ticket she never got to use. This case was staggering, but the one on your screen right now is somehow harder to look at. Click it.